this presentation is designed for all of you. So what I've done is I have a lot of slides, but I'll request na lang, yeah, can go to the next slide, please. There you go. Okay, but despite that, I wanted to just give a lot of detail because I'll request that you get hard copies or you were able to access the PowerPoint so that if you have details or questions, it will be all there. Because of course, with the time allowed, I will not be able to go through everything in detail, but my objective is to be able to address most of it. And then also I have various examples already and parang a mini quiz. Pero syempre, because this is not interactive, you won't be able to answer it, but I'll show you the answers. I thank you very much to JJ and the team and Marcy for inviting me. But really, ang ganda ng earlier presentation ni Renzi ni Fitz. I was aliw na aliw. And even yesterday, sila Sam YG, nakakatawa. Of course, I deal a lot with the others, sila John Mangun, sila Gas Concho. The objective anyway is that I guess the earlier slide or earlier speakers were specific, either bonds or equities, no, or some already were touching a little the strategy. My objective the next 30 minutes or so is just to convince you to mix it up also and to give you examples and I guess give you some settings. Admittedly, like what Fitz said earlier, it always depends on what your objective is. Diba? So there is no one solution for anybody. It has to be tailor fit. You can have financial advisors, consultants helping you with that. Even BDO has a team doing that. I will show you a slide later of who to contact should you want to invest through BDO. But this is not a plug for BDO. This is a plug really for basically any financial product in the Philippines because we want to help everybody anyway. So I'm not trying to sell our company. Okay, next slide, please. Just again, basic principles. I hope everybody knows this. Syempre, the higher the risk, the higher the return. Remember, the higher the risk, the higher the return. That's the basic importance lang. And what's important for you is to understand what is risky and what is not. As an example, if you see sa bottom yung cash all the way to equities, generally on the left side are the most conservative, risk-free or risk-less instruments, cash, money market, di ba? And even if you put it with the bank, may insurance yan up to, let's say, 500,000. And then as you go to the right, the other ladder, the bonds, and then the equities, they are the more risky already. I will have a slide later on of more examples. Okay, next page. Next slide, please. So here, the key really is it depends on what your goal is, as what Fitz mentioned earlier and Renzi. So at least I'm relating very much their presentation. Do you just want to beat inflation? Inflation now is around 2.5%, or is there a benchmark? Of course, you might say, I want the benchmark at 12%. But in reality, wala na nag-offer ng 12% ngayon. Anything that is offered to you above 10%, I think you have to be a little scared already kasi baka takbuhan ka or baka scam yan. So mababa na ngayon talaga interest rates. It's really relative. Admittedly, I guess I might be a dad to some of you because I'm already at that age when my children already working, and I just try to give them advice, diba? But during my time, nakita ko ngayon 20-30% bond yields ng job bills. That was the governor of the central bank at that time because naghihirap ang Pilipinas. Now, ang baba-baba ng rate because ang ganda-ganda ng ekonomiya natin. Relative to, despite these COVID problems, we're doing pretty well. And then sa bottom half ng screen, it depends also where you want to be. I will give more examples later depending on your life cycle, life stage, or how you want to divide your investments. But generally, of course, if you are already investing like me, close to retirement, I'm a little more conservative kasi nagtatabi na ako. I cannot be masyadong yung risky yung investments kasi baka masunog ako, diba? But when I was much younger, so totoo lang, maybe like some of you, kapit sa patilim pa nga buhay ko noon, wala akong pera, so parang I wanted to maximize it. Kasi talaga, you're hoping that these monies would double, triple because you needed it for your future. Pambili ng kotse, pambili ng bahay. So it depends on your life cycle. So what's important is for you to understand, ideally, which are the riskier instruments. Stay away from the most risky. And then, of course, if you will go for the more conservative instruments, you should expect a lower yield. Okay. The next slide. So basically, the previous slide just showed you the risk-return trade-off. Here is another graphical explanation So at least what's important, the lowest risk is at the bottom, treasuries, because of course those are government. And then you go to municipal, City of Cebu, etc. They used to do that. Wala masyado ngayon. Then you have mutual funds, as sila Renzi and Fitz explained. Then you can have stocks. Then you have junk bonds. And then you can have futures options. Bitcoin can be there. So at least just to give you an idea of what the risks you should be taking, or at least what are the risks here. Next slide, please. Just to give you an example also, these are the expected yields. No, if you invest in currencies also, it's very challenging because sometimes it really, we don't understand why the peso is so strong. Then of course it will depreciate suddenly. So even I avoid currencies, although in general the peso is expected to depreciate. So it's also good to have maybe 10 or 20% of your, if you have investable funds in dollars, just to hedge. But generally, if you will see, the return on dollar peso is negative, no, and it's volatile. On equities, if you will see, it's around 16. It's around expected return should be 10 to 12%. Is that what you should aim for with your equities? For fixed income, which are bonds, corporate bonds, government bonds, you should be looking at around 3.5%. These are gross, wala before taxes. And then cash, if you can make 1% now, di ba? Sa time deposits lang, mga 1%, 1.5% nakukuha natin. Next slide. Why is that important again? Because depends on how your conservatism also, but depending on what you invested in, if you see the graph here, if you invested in equities, of course, you have the highest returns, diba? But it also has the highest volatilities. And then if you invested sa baba, cash yun yung pinakamababa. Nawala lang yung legend for some reason in this chart. But basically, what does it show? If you say, lagay mo lahat sa equities, if you do naman, pwede rin kayo masunog. Because sometimes talaga, the market is too volatile, di ba? For example, if you just invested in the market March, a day before COVID, and then COVID bumagsak, the stock market went down around 40%. You lost 40% of your capital. If you left it in bonds, intact pa naman yan. Kung nagbabayad, you might have been getting 4%, but 4% ang return mo versus a 60% drop in equity. Okay. Another example, let's say bumili ka naman ng stocks nung April. Diba medyo bumagsak ng gusto yung stock market. Kung bumili ka ng April and then you bought some of the blue chip stocks, by now, you could be up maybe 10-15%. Because pumalo naman, bumabawi na. So I guess there was an earlier presentation also, maybe that was Gus Kosho and John Mangun, and then earlier the first speech today was about the market. We're expected for it to improve naman, babawi rin ng equities. Mas malaki ang upside ng equities, but it's also more volatile. Anyway, asset allocation, why is this important? Again, I'm not expecting you to memorize this. My objective is to give you this presentation. You should get a soft copy. So basically, what does it say? At the top, you will see MBAM. That basically shows kung moderate or aggressive or be balanced, depending on your risk appetite. So for example, if you're investing only in pesos, yung MBA na yun, diba? Mas madami ka ngayon cash kung very conservative ka. But if you're a little more aggressive, if you'll note, the weight on the equities is a little higher. And because it's a little higher, the expected return is going to be a little higher. That's all it means. And then also, if you can invest in some currencies already, you put some into foreign currencies, maybe US dollars, or if you can invest in renminbi or Hong Kong dollars, that's also okay because we think those will do well. So that's the objective. If you will see offshore currencies, you invest up to 30% if you can. So, for example, if you have OFW relatives or if you're an OFW, I recommend that you keep 30% of your earnings, don't convert it, and then the rest you can remit it para it's converted to pesos. Okay, so that's what this slide is saying. Next slide, please. As I said, also there's going to be an example of depending your age, naman. So, for example, the students among the participants, maybe put a higher percent here. For example, look, enlisted equity, and then madami rin sa cash because you need day-to-day cash, but you put a lot of equity kasi also that's also a little bit more aggressive. Okay. If you note, for example, in the 25 to 55, as you save more, as you earn more, your asset classes will expand. we did not even talk about it this last 2 days. But you look at it below listed equity and private equity. That's where you're already investing in non-listed equity. Kasi you're parang a private equity, venture capital. You might put some money there. Real estate, syempre you're investing in your houses already. And you can consider investing in art, jewelry, and your cars. No, I have my personal save to that. We can talk about it later if there's time. But that's more naman because hilig nyo na lang yan. Okay? Next slide, please. This one also just shows you, again, a mix if you have offshore and US dollar bonds, depending also on your investment appetite. Again, just to give you an idea, because ideally somebody should sit down with you, an investment analyst or a counselor, to design your portfolio. Okay? But these are just some of the outcomes we have. Okay, go to the next slide. Here are just some notes. Okay? Here. There you go. I don't know how much detail the audience would like to hear about this, but I think it was mentioned a little bit, but maybe at least I'll talk a bit about each bullet point. REITs are the new class. There's the first REIT listed earlier. That was the Ayala REIT. There will be more expected to list by next year. Double Dragon, Vistaland, etc. are doing it. The yields are targeted around 5 to 6% on a gross basis. Remember, though, that if you invest in REITs, because that's dividends, the tax is only 10%, as opposed to fixed income or bonds or deposits, it's 20%. You have to remember that because the key in investing also is the after-tax return. I'll give you an example later on. The second bullet point talks about preferred shares because they are preferred shares recently issued by PH Resorts and Megawide. Some are perpetual, and I think they were discussed earlier. I guess the key is to know the maturity, if they're callable or not. And these are also 10% tax. Okay, next slide, please. Okay, real estate also, you just have to be careful because real estate also is very good. Sometimes if you cannot buy your own house yet or condo, you invest in our SM Prime or Ayala Land as a proxy or Mega World to real estate. Of course, for this year, because of COVID, some of the stocks, real estate stocks, got battered. A lot of you probably also had reduced interest from living in a condo because madaming common spaces, mas madali mahawa. So we saw also some demand increase in the horizontal, meaning mga subdivision instead of vertical condos. So may konting shift dyan. Also, what you'll notice in real estate in the past, ang gustong-gusto ng mga equity investors are real estate with recurring revenues. What is recurring revenues? Yung may mga malls, SM, Ali, for example. Pero because of COVID, sila naman natamaan, sila ang nagka-loss. Because rightly or wrongly, the malls, diba, they were kind-hearted. They waived the tenant, diba, the leasing fees. So because of that, they've incurred lots of losses. Wala naman silang tulong sa gobyerno, but they help the tenants. But because of that, bumagsak ang stock prices nila because they're making losses. But hopefully, once COVID, there's the vaccine, bubukas na naman yan, then that will improve it. The second bullet point is energy and utility, and that's fine. You can keep the slide there. But generally, energy or utility are supposedly parang recession resistant. Kasi generally, we will need electricity and utilities and water, di ba? Parang maski ano nangyari, we need that. Those are basic, which is relatively true. But on the other hand, just to give you an idea also, and this is when you look at stock selection, look at Meralco. It's the largest utility company. But Meralco also got hit. Why? Because of the 3 million or so Meralco customers, the bulk of its revenue comes from the industrials, the factories. And generally, if you understand the stock, Meralco subsidizes the retail. Mas mababa kuryente natin per megawatt than if you're a factory. And nung nag-COVID, nung sara yung industrials at mga factories, bumagsak yung revenue ng Meralco. So para makita nila may impact. Invest in water, Manila Water. Of course, water is important, but the other hand, nung nagka-issues with the president and the price and everything, nagtamaan. So those are just things to be a little wary of. Okay, next slide. So power generators like First Gen and AEV got also hit because they have different strategies. Again, I'm just trying to give you an idea that even within the sector itself, they have their nuances. As an example, FGen, which is owned by the Lopez Group, was more conservative in that they did power sales agreements with most of their generating ability, their kuryente. Parang pre-sold na. But because it is pre-sold, medyo fixed yung return. Wala nang variation. So that's good. It's stable. Pero kasi the other part, example, AEV, Aboitiz, had a bigger portion of selling to WESM. WESM is the spot market. That has more volatility. During high electricity prices, they make more money because they sell on the spot. But nung bumagsak yung electricity because there's low demand, this COVID, because sarado ang industrials, di ba? Eh sila malakas gumamit ng kuryente. Even if you're at home, tayong individuals, it means na bumagsak yung kuryente, bumagsak ang WSM. So that means they were subject to more volatility. So para alam nyo, so energy demand, importanteng maintindihan nyo rin. Para lang as stock pickers or as investors. Next slide. Here, this is important. Look at the numbers on the left. Sorry, nabaligtad ko lang yung government yields and tenor. Maybe look at it now. On the left side examples, 1 month. 1 month, the yield should be 1.03% gross. These are all the government rates. It's called BVAL. All the way to 20 years should be 3.9%. This, if you graph this on, if you remember making graphing, the bottom half horizontal chart yield is the time, the tenor, and then the yield is the x-axis. You will see it sloping upwards. That's the yield curve. So basically, the longer the duration or the tenor, the higher the risk. Because syempre naipit rin yung pera mo ng konti. Why is this very useful? For you investors, this will give you an idea of how things are priced. I'm giving you very rough ideas already. This is very, very important. Generally, if you want to know how government will price its deals, this is already how government is pricing on a peso basis. Corporate bonds, the third bullet point, are generally priced at a spread over government rates. So AAA rated, I think there was a discussion earlier, they're rated bonds can go between 0.5 to 1.5% higher than the tenor. So example lang, you want to do a 5-year bond, corporate. Government should be pricing it around 2.75 in that example, right? Yeah, 2.75. You add 1.5, that's around 4.25. Then that's what a corporate bond will look like. Para may idea lang kayo. There's a risk premium because it's a corporate, it's not fully guaranteed. And then mamimili lang kayo. And then sometimes project finance is a little higher, that can go up to 7-8%. And then, unfortunately, for credit card and SME loans, they're priced on mataas talaga. And some of you are SME borrowers, alam niyo mataas, even if it was now capped because of bayanihan. But just so that you know, that's how we price it. Okay, next slide. Here lang, some of the issues driving the yields. I'll just go through them quickly, but there's a single borrower limit that's important. The big corporates have a single borrower limit, so that forces them to go to the bond market instead of the loans. Tenor preferences are interesting in the Philippines. Local investors prefer 3 to 5 years max, maybe, versus foreign investors can go up to 10. That's why when you look at the recent investments, PLDT, Megaworld were able to raise 10-year money dollars abroad, pero local, usually bonds 3-5 years lang. And of course, foreign investors are bigger, but syempre there's more competition there. So sometimes Philippine corporates or issuers have to pay more. And then also you can get away with brand recognition, di ba? Kung kilala ka, maski hindi maganda yung financials, sometimes tayong Pilipino, we buy based on kilala ko to, mas tiwala ako dito without looking at the balance sheet and income statement. Next slide, please. Okay. And then, of course, the size of the market is important also, because in the Philippine market, I can do an equity deal, maybe up to 6 billion. Otherwise, it's pushing it already. For a Philippine corporate, maybe up to 15 billion. Pero for bank bonds, malaki ang demand, 50 billion. For government securities, I think Treasurer Lea Dillon will speak after me. They can raise up to 400 billion pesos. So malaki. And then this thing below is mark to market for the sophisticated investors. It's important lang because the earlier speakers also mentioned when you bought a bond and then when rates go down, lamang ka kasi you bought it at a high rate. Pero you'll have a gain. Pero also if you bought a bond and then tumaas yung rates, parang nalugi ka kasi tumaas yung rates, di ba? On a mark to market. If you do that, but if you're intending to keep it naman, hold to maturity is the term. Hold to maturity, It doesn't matter because if you expect to get you'll get your principal back at the end, except you bought it at 4% when in, well, let's say the prevailing market was 6%, but you will get your investment back. So that's the key naman there. Okay, next slide. Oh, here's a good example. There are many issuers with many options. I'll just give you an example of the recent deal for San Miguel. I guess the benefit lang I have, and maybe that's where you can email me nilang or ask my colleagues questions. Kasi I'm on the other side. I usually work with a lot of the issuers, with the Treasurer De Leon. I work with the likes of Ramon Ang and Andrew Tan and his people, because I'm the one helping them raise the money. And then, but we have to know, of course, what they need, and we have to know what you, the investors, need. My job is to marry it and to find parang the supply and demand solution, di ba? So in this example, you will see lang San Miguel has listed many instruments, and of course, the higher the tenor, the longer the tenor, the higher the yield, di ba? But also, just to give an example, when you look at this slide, that's where my glasses are. When they did pesos, for example, pesos, the highest peso rate they would pay was 18E, 6.25%. Yan, that was but that was launched 2 years ago pa. But now, when they launched this year, the EMTN, the third row, 5.5% for US dollar. So para makita nyo, if you have dollars, you can get 5.5% on the dollar yield versus 5% on a peso. So if you expect the peso to depreciate, kikita ka ng malaki kita mo. The only problem is, pag dollar investments, dollar bonds, it's really not available here. The minimum is usually $200,000 as a single investor. But you can buy naman sometimes through funds na lang. Kasi nga, as mentioned earlier, pag peso bonds, you can buy as little as 20,000 pesos. Pag premium bonds, 500 pesos. RTB, which are government bonds, pwedeng 5,000 pesos. So it depends. Equities, even as little as 2,000 pesos, you can buy equities. No? So it depends on the instrument. So just to give an idea that there are issuers of many options, and the key naman for you is to select na lang the instrument you want and talk na lang to your investment, investment specialist. Okay? Next slide, please. Yeah. At least I'm getting pretty near naman the end, and I'll open it to questions. This slide is important. I don't know if you can see it, but what's important here, this is another important código for you, okay? The other important código earlier, I hope you remember, is the yield curve. Of course, that changes over time, but it just gives you an idea of what rate should be. Here, I try to give an idea, at least on the typical assets you can invest on in the Philippines. If you invest in cash, for example, you keep it in your wallet, of course, there's no interest, or you keep it under the mattress, 0. If you invest in CASA, it is less than 1%. Okay? And then on the rightmost column, I already told you what the tax rate is. It's important, because let's say 1% yung CASA mo, but you're an individual. What's your tax? It's really 0.8. At 0.2%, so your take home is 0.8%, not 1%. What's important is how much money you get. Kakaltasan na ng bangko yung 20% withholding tax. Also, LTNCD, for example. Remember, LTNCDs, although minimum yata is 500,000 issued by a bank, kasi 5.5 years or longer, but look at the rate, around 4%, 3 to 4%. And look at the tax, it's 0. So if you can get an LTNCD, kinote say 4%, the net yield to you is 4%. Malaking bagay yan. Okay? Time deposit further down. But look at the bond. Even if you invest in the ROP 10-year bond, okay, it used to pay as high as 12%, but now it's around 4%, let's say. The interest is 20%. So if the interest is 20%, what is the effective yield? 4 times 0.8, 3.2. So you're getting lower for a bond from the government than if you bought an LTNCD. So sometimes there are these opportunities. It's not perfect once in a while because of tax advantages where you should take advantage if you're an individual, for example. And then also preferred shares are 10% versus 20% naman if it were bonds. And then further down. And then also let's say paintings, watches, and cars. I guess some of you, let's say, si Mr. Atencio, mahilig rin sa art, and he actually publishes books. So, for example, but for some of us, maybe you if you buy, let's say, paintings, you buy muna because you like it, even if you don't really appreciate the value. Parang as if wag nyo na lang isipin na tutubo ka later on. And same thing with cars, di ba? Unless you're buying exotic cars. But and watches also. In general, if you buy quartz, di akit yan. Automatic watches mas may chance to tumaas. Or if you bought Rolexes, it continues to appreciate, or Patek, for example. But if you buy a Seiko, generally it does not appreciate, although there are collectible items also for Seiko, for example. So just to give you an idea, I'll have an example later on. Next slide. So that slide is important. Here, I think I'm in my last 2-3 slides. Okay, good. This slide, dapat, sana if it's for interactive, as an individual, you have 1 million. So what are your after-tax yields and where do you invest? I wanted to give an example. Kasi nga, if you had 1 million and the CASA gives you only 0.3%, because I checked yesterday, how much will you get in 1 year of interest? Ideally, calculate that, diba? So the way you calculate that is 1 million, you have to know what the tax rate is. Or let's say in this case, it's 20%. So 1 minus multiply 0.3 times minus 0.8, diba? May tax pa yan, then you get the after-tax yield. And then so forth and so on. Because what I wanted to show you is that sometimes nabubulag tayong investors when we look at the coupon lang. But sometimes you also have to look at the after-tax yield. Because dun mo makita talaga kung maganda yung yield or not. And sometimes also, in addition to the tax yield, you have to look at the tenor and the kind of instrument it is already. Okay? So this is supposedly your exam. You do it na lang on your own. The next slide, okay, go to the next slide. Sinagot ko para sa inyo. Para at least you try to do it on your own and then you see if it equals this. So when you want to do it on your own, you just multiply 1 million times CASA 0.2%. That's the effective interest you get in 1 year. A corporate bond, 1 million times 3%, etc. Now look at this one. Okay, so if you invested here, you can already get an average return depending on your risk nga. If you are, let's say you wanted the highest yield, you're the individual, where should you invest? Okay, highest yield. I would look at the right-hand column. A highest yield, I think I see REIT, R-E-I-T, 5.2%. Diba? Pero that's also perpetual because, you walang pretermination yan. You just have to sell the stock in the future if you need money and the price could go up or down. What is the next highest return? A utility stock. Diba? So again, that might be a PLDT or a Globe, and your after-tax yield is 5%. Again, the stock price will go up or go down. Here's a good thing also. If you invested in PLDT early during the year, guess how much PLDT has rose since January? 30%. The stock market went down, but PLDT has gone up 30%. So if you're making 5% already dividend, and then your stock appreciated by 30%, in 1 year you made 35%. That's a simple way of looking at it. So it shows you also depending on how you look at things, no? But also you can also look at the tenor. If you had money, but you expected you needed the money only in 1 year or 2 years, diba? Then you would really be focused on the shorter instruments because it's if they're not liquid, may ipit ka, especially if it's private equity, diba? Hindi mahirap mabenta. And you will be prone to the market price. But this is just an example para lang when you think about what you will invest in, you have to look at the after-tax yields. Also naman, if you're using corporates, may advantages rin yan. So for some of the audience today who can use corporates as tax shields, if you buy naman equity, your dividends are 0% because it's a corporations ginagamit nyo. So sometimes there are advantages. Okay, next slide. Okay, I'm going, I think, into my last 2 slides because intentionally I wanted some time for questions. Here naman is an example. Okay, it's in a way it's a portfolio guideline which I think I used before for Phoenix or MAP. So I just removed Phoenix or MAP. But you can use it for your companies, for your retirement funds. You can use it for your families. So parang kumbaga, this is a template already. Again, because it's kanya-kanya to, but you can use it. So these are just some of the guidelines. The criteria, it has to be safe, it has to be liquid, diversified. Generally, syempre for schools, ayaw mo itaya yung pera ng estudyante or yung pera nyo. You don't want yung masyadong nakakatakot yung volatile. So these are for safe investments. No? This portfolio. Next slide. General policies also. how much do you invest? Here, this is just the definition: beginning investable funds plus cash receipts minus capex minus operating expenses is what's investable. Para you know how much of your businesses or your SMEs you can invest, diba? Para you're already after depreciation. Para kasi generally, as a rule of thumb, you should also have parang 6 months of your working capital always in cash, ready kasi pang sweldo, pang other needs. But this is just a formula. So when you go to the next page, when you know how much you can invest, okay. So you have a working cash balance of 6 months, diba? And then your placements of funds will be in these various securities. You define it who it will be. As an example, time deposits, the SSA, etc. Okay, and then this slide is perfect. And then also, so yeah, and this slide will tell you what else you can invest in. You can invest in PDEX bonds or PSE. And then item number 4 is very important for you as individuals or corporations. Previous slide here. Item number 4, you can also decide, okay, by tenor, maximum of your funds can be up to 1 to 3 years, pero siguro maximum up to 3 to 10 years of fixed income, 50% lang. And then, for example, of your total funds, you can only put a maximum of 30% in preferred shares or a maximum of 20% only in common stocks. So that means maybe the rest are cash or bonds. So that you have a high level idea of your portfolio para you're already making it more protected, conserving it. So there's already tenor and there's also an allocation for type of instrument, okay? And even currency. Next slide. Here pa nga as another example, number 5, if you're going to invest in bonds, if you want to be conservative, you invest only minimum AA rated, AA or AAA. Diba? And you can even say no individual group will exceed 30% of your investments. Pwede ganon. Because you might say, matutulog naman ako, I'll only buy SM or Ayala. But sometimes, possible rin, you're masyado kang nakasandal dyan. So it's good to spread it out. That's possibility. At least you have this policy, then you will actively know, should I diversify it? And then even here, number 6, very important. For diversification, no single stock or corporate bond should account for 25% of the overall investment ceiling. So para again, it also gives you diversification and makes you think para you process that. Again, it's just a suggestion, but this works for some of the associations I've been in. So I'm sharing this with you. You can tailor fit in more. Pero para at least when you come out of this conference, meron na kayong example of where to invest based on age or based on how risk averse or how aggressive you are and what currencies and sort of what classes of instruments. Okay, next slide. So basically the summary is that there's no one portfolio for everybody kasi you have to tailor fit it depending on your life stage and your needs, diba? And you want to diversify, diba? As long as you know that the higher the risk, the higher return, and you invest with open eyes, I hope you invest well and do well. No, there are also many other other asset classes we did not even discuss today, like commodities, gold, things like that, crypto. But I'm sure you're reading about it also, and maybe I can also just answer it offline or during the Q&A. Next slide. Sorry, this is just a plug, but so that I'm not selling, but the box below is where my people can be contacted. That's the direct line and the email. Because we're an example where you can access all the items. You can get equities, fixed income, funds, research, and then you can actually design your wealth management if you're at that age, how we will protect your assets. We can also design portfolios for you. And then we have, I guess, depending the target market, we have for the mass affluent, for the emerging affluent, and the high net worth. I guess we stratify it. And admittedly, parang airlines, if you're high net worth, just so that you know at least how banks look at it, high net worth is usually, let's say, 10 million pesos investable funds up. Emerging affluent is usually 5 million. Mass affluent is 1 million investable funds, let's say 1 to 3 million. And then below that is just the regular branch clients. So parang kumbaga, kung airlines, naka-business class ka na kung may 5 million or 10 million ka na, tapos may personal relationship manager ka, just so that you know. Okay? And then the next slide is really, I think, my contact details. There's my cell phone because I answer by text anyway. And I don't have I have an IG and I have a Facebook, but I don't actually have. I don't really use it. I just use it to read lang, and I look at marketplace and stuff because I just like that's my retail therapy, and I look at advertisements, and then it's my email if I can help you or if I can refer you. I'd love to, but today really was really just to share also information because you guys are very important. You spent time the last 2 days. The fact that you want to learn is great, and any of the speakers would love to engage you more, and I would love to help you more. Just send me a text or an email if I can, or I'll refer you to people if you need to invest. And then I guess the next slide is really just to say Q&A, and I pass it floor back to our host. Thank you very much.
Okay, thank you, Sir Ed. We'll now have our question and answer portion. And let me throw in the first question, Sir
Despite
Ed.
the technical difficulty glitch, we finished before 12 and we have time
All
for
right,
a few questions.
okay, Sir Ed,
Yes.
let me throw in the first question. Well, we all know that this year has been really challenging for us, and with the pandemic that we have, the crisis, and the recent typhoons. Now, where do you see the stock market ending in 2020 and also in 2021?
Yeah. No, that's a good question. It's really hard. Uh, I was pleasantly surprised because I was frankly a little pessimistic. I was expecting it to be around 6.8, 6.9, but we've surpassed that already. So because nga of the Pfizer and Moderna. So if the vaccine news is more positive, despite the increasing number in the States and Europe, there's a chance we might even go up to 7,100 conservatively for the year. And then, okay, whether it be 7,000, 7,1, kasi here's another tip. Usually December 31 or last business day, umakit stock market kasi nagwi-window dress yung mga kumpanya. So they want their stocks to go higher. So umakit yan. So where we are, I'm hoping it akit ng konti. That's just something. But what's important is from end of this year to end of next year, what do we see? You had an earlier market read, but the vaccine should improve. So therefore, more people are out, more people, businesses are open. I would think that easily we should go up siguro mga 10 to 10%. So if we close at 7,000 now, 7,700. But sometimes, because even if it's cheap, if you buy, hindi na mo maakyat, no? And I'm telling you that from experience kasi I really am active also, even personally. So you have to be selective pa rin. If you, the audience, are going to buy, if may sana look at it. If you buy today, look that and be willing to hold for 1 year. I'll be more conservative because by then may vaccine na, people will go out. Then at least if you buy in general, it will go up, diba? And then again, sectoral. What are the safe stocks today? Kasi not all industries are doing well. Diba? Telco, PLDT Globe, parang you can sleep because we all need telco, lumalakas yung broadband, converge, lumalakas. Those are very safe, diba? Banks natamaan ng provisioning but we're providing it already. So I think malaking upside niya next year. Real estate, I'm a little careful. But the big ones with the malls, because their income is depressed, once makabawi yan, gaganda yung income. For example, utilities also, power, electricity, lalakas yung demand. So may mga upside yan. Where I would be a little bit careful more are the tourism maybe. Kasi I'm still not sure how much makakapasok. Airlines, I'm a little worried with, even if kaibigan ko si Pal and si Bupak, the owners, but because we don't know talaga if there'll be enough demand and where oil prices will be. But food, telco, I'm very positive on, and then maybe select utilities would be positive on. So just to give you an idea of the sectoral, and then you have to do one by one selection for it.
Thank you, Sir Ed, for that answer. Now, here's another question coming from Mark Montero. At a young age, is it favorable to be an aggressive investor given the fact na may funds ka, then slowly convert to a more conservative investor?
Okay, Mark. I hope I will give you the correct advice. But when I was your age, I was exactly that. Parang kumbaga, maybe because diba, when you're young, you can make more mistakes, so you're willing to be more aggressive, and that's what my slides also would show. So it's okay. Maybe because I hope you're not offended, pero di ba, during the time, we still are living with our parents. So, di ba, even if malugi tayo, we have a roof to go to stay under. Versus if kunyari, nagsasali ka na, ikaw yung padre de pamilya, pag maubos yung pera mo, patay ka, kawawa yung asawang anak mo. So yes, you can be more aggressive, but wag lang yung sa sobrang, ano naman, wag yung mga 5-6, wag yung mga unlisted na hindi natin kilala. Online job experience of trading. Para lang maintindihan nyo. But yes, you put us, but for safety, you buy the RTB. I think 12:30 si Treasurer De Leon magsasalat. Buy RTB, buy Ayala, buy AEB. Yung mga yan, matutulog na kayo, pero walang gagawin yung anak mo. Because every 6 months, kukuha lang siya ng kanyang deposit. Yung interest niya will be deposited. She doesn't have to do anything because dadating lang yung pera. Wala siyang active participation. So I guess for the young ones, I want you to get experience, di ba? And the only way to do that is to be trading.
Thank you, Sir Ed, for that. Okay, since we are already run out of time,
Yes.
and there's still a lot of questions, let me have the last question for Sir Ed, and that would be: should we buy longer dated corporate bonds if we think interest rates are going up?
Good question. Okay. So here also, what's important is what is your view of where interest rates will be? Example, if you bought nga San Miguel today and let's say you got 5%, okay? Let's say 5%, 5 years. Example lang. But if you think interest rates will go up next year by 1%, so magiging 6%, one strategy is you only put it in a bank for 1 year, even if it's 3%, and then next year, bumili ka ng San Miguel na 6%. So what you wanna do is you put a portion that's in short term where when you think interest rates will go up, and then you invest it when you think when nagtaas ang BSP, usually Governor Jokno will announce, that's when you do. Kasi for example, di ba, the other day he just reduced it another 25 basis points, so pababa. So in a way, it's good for the next siguro 2 years to invest in longer term instruments because he will try to release money to help the economy. And then once the economy is heating up again, which might be in 2022, that's when interest rates, I think, will go up. So parang for the next year, it's okay to lock on for 1 or 2 year money. But in 2022, he will already try to control inflation because prices will go up, demand will go up. That's when you be careful with your longer term investments.
Okay, thank you, Sir Ed. And that completes our question and answer. Are there any parting words before we end our discussion?
Yeah, no. Just thank you again to TGFI. And thank you to all the audience for watching. I hope you learned something. So again, there are just too many things covered, but I hope you're able to get a soft copy of the presentation so that you look at the charts of the yield curve, the sample asset classes, the taxes, and also my contact details. So at least you can reach out to me or my people so that we can help you. Yun lang. Happy investing and have a good Sunday. Thank you, everybody.